Good morning, Frank Watkins, 13th of October 2021. Not with Kylie today, she's tied up with a client. However, I have Joe with me. Joe has recently taken over the role from Richard. So apparently, Joe, we have a couple of questions from from yesterday's recording.
Yeah, thanks, Frank, and thanks for having me on today. We're getting some wonderful feedback from everybody, so thanks for that and keep that coming. One of the questions that we had, Frank, was a question behind the formula behind the bar trend chart. So I'm just wondering if we can start with the bar trend chart to go through that.
Okay, look, the bottom line with the bar trend chart, and I'm not going to go right into the nitty-gritty detail. Bottom line is, when I first went to a group of programmers over 20 years ago, I said that I wanted a visual representation of whether something was going up or down. As you can see on the All Ords chart here, the green is up and the red is down. There is a formula behind it based on standard deviations and linear regression. I'm not going into that. It's a proprietary indicator. And there's a few other tricks to it. But some people who are watching this at the moment may be colourblind. So you may want to go into your settings and change the colour setting on that. So blue and red or black and red, whatever you like. If people really want to know a lot more detail, I'm sure there's something about it on the YouTube channel. Otherwise, give us a ring. Okay, any other questions?
Nothing for the moment. Let's go through some scans and we'll see what we can find.
Okay, I'm going to do the high, low scan again first, because I really like this scan, but seems to be a fair bit of confusion. So the first criteria with a high, low scan is it is a buy signal. It's the first buy signal you're going to get when a stock has changed direction and is coming off a long-term low. Now, just as an example, I'm going to go back to Kogan. Kogan was the first stock that I put up on Facebook as a high, low entry in the depths of despair during COVID. Kogan hadn't really done much in the lead up to COVID, but we had a high, low entry. I did put that up on Facebook. From memory, 25th, 26th of March, that went up. At that stage, during COVID, it was as bad as it could get. But that's what you're looking for: a long-term low, a rally, a higher low, break the high, enter. The next one that I put up on Facebook, and by the way, a lot of people laughed at that Kogan entry, but I followed up with Fortescue, and this was about the 6th of April. So we had a significant low during COVID, a rally, a higher low, higher high, and away it went. So that's what we're looking for. The question I got was, is BYE higher low? Well, you've got a long-term low, first high, higher low, and higher high, so there's your entry. But as for this being high low, high low, that's now just formed a trend channel. There is, to my mind, there's no entry. You may have entered on a break of this resistance, but it's not a higher low entry. That was back here. So I've done the scan. Let's scoot through them. The first one, BLG. what can I say? I think that looks really good. You've got a very significant long-term low. You've come up to a high. You haven't quite filled the gap. You've backed off to a higher low. We're now waiting for the higher high for entry. This probably looks even better. Significant long-term low, a rally, high lows, just trying to get a higher high now and breaking through the 20-cent level, big round number. So let's put today's data on. Okay, we've backed off. We haven't got an entry yet, but if you drag out the microscope, now that we're on the trend chart, down is red, a little bit of a green effort there, more down. And today so far and yesterday we have black ticks. You'll notice a black tick back here and a black tick here. On those days, mathematically, the trend changed. So if we've got this potential trend change in the last 2 days, and if we break through that 20.5 cent level, I'd be having a serious look at Collection House. Carrying on, Hazer, you notice we changed trend here. We're green, we're just, this actually came up in yesterday's scan at that point, and today, with today's data on, we have some pretty good follow through. I would still rate these high low scans as good as you can get with pattern recognition. Not a big rap for this. It's not a significant long-term low. It's only about 6 months or so. But also, we've cut through the data here. Now, the computer has done this. You've got to realise that when you are looking at any scan, computer-based, it's not always going to be perfect. Your eye will see things that a mathematical formula cannot see. So, not always perfect, but certainly enough comes up to give you reason to trade or reason not to trade. IVZ, that's interesting, but LAU, see, I just don't like that. So move on, simple as that. That'll probably be the one that goes through the roof, but still. This one works for me. It's significant long-term low. We've had a high low, and we're trying to break. It's as simple as that. Try not to complicate things. You can go back to your candles. Doesn't look any different really. You can go to Heiken Ashi, and that probably actually looks a bit more messy than usual. You can check it out with a bar trend chart if you're into maths. Okay, Joe, did you get that as someone relatively new to the market? Did you understand that?
I did.
Okay.
Yes.
So there you go, folks. It all
different, am I?
Yeah, don't contradict me, please. Just keep it simple, people. If you like the look of the chart, if you have reasons to trade it, well, trade it. If you don't like the look of the chart, well, just move on. It's as easy as clicking the next button. See, something like that, I'd be waiting for a break of at least 7.5 cents, not a break of this line. Anyway, I'll wrap it up at that. And touch wood, we'll talk to you again yesterday. We did talk to you yesterday.
Yeah,
we'll try and talk to you tomorrow.
And of course, there were some messages too about getting these perhaps live stream. I love these ideas. Please keep them coming. Obviously, we try and get this out as early as possible, but then life does get in the way a little bit. But at the very least, get it out for the first 4 days of the week. If you are sort of teetering on the edge, whether you want to give the software a go, please communicate to us. You can always email me, joe@protrader.com.au. We're pretty friendly here, aren't we? So
We try.
Yeah.
You can spell a name J-O, not J-O-E.
yes, good point. Yep, email Joe. So want to keep that communication going, and
Okay, thank you all.